Let's talk business. The folks at DelMorgan Co are calling it now. 2025 is shaping up to be a massive year for mergers and acquisitions. Why? Well, take a look at the landscape. Business owners and investors are feeling optimistic. Deal activity is ramping up. There's a new administration in the White House and the economy keeps chugging along. Put all of that together and you've got the perfect conditions for an active and highly lucrative market. Now, let's break this down. In 2024, we saw global M&A deals surge thanks to strong macroeconomic conditions and solid valuations. That momentum isn't slowing down. If anything, early 2025 is proving that deal flow is not only holding steady, but expanding across multiple sectors and regions. That's a good sign. It means opportunities aren't just concentrated in one corner of the market, but spread widely, setting the stage for a strong year ahead. The public equity markets are also playing their part, staying resilient and buoyant. What does that mean? Well, healthy stock markets often lead to higher private market valuations, and we're already seeing that take shape. Middle market and lower middle market deals, those bread and butter transactions that keep the economy moving, are dominating, and that's expected to continue throughout 2025. Now let's talk politics, because let's be honest, when it comes to the economy, Washington matters. The new administration sent stock prices soaring after the election. Sure, there are still question marks over specific economic policies, but the markets, they're clearly loving it. By February 2025, US equity markets hit record highs, and that bullish attitude has bled into private markets as well. Buyers and sellers are motivated, capital is flowing, and there's a growing sense that now is the time to strike while the iron is hot. And now, tax policy. The administration is signaling big moves when it comes to corporate and personal income taxes. There's a push to extend the 2017 Tax Cuts and Jobs Act, which would otherwise expire at the end of 2025. With a Republican-led Congress, analysts are betting that at least some of those provisions will stick around. On top of that, there's talk of exempting things like overtime pay, tips, and social security benefits from taxation. And corporate taxes, there's a strong push to bring those down even further. So what does this all mean? It means lower taxes could encourage more investment, more spending, and, you guessed it, more deal-making. It's a recipe for an explosive year in finance. DelMorgan Co is watching all of this unfold and helping clients position themselves for success. The deals are out there, the market conditions are favorable, and if these trends continue, 2025 could go down as one of the strongest years for M&A in recent history. So buckle up, it's going to be a fascinating ride.